Imagine waking up one morning, grabbing your phone like you always do, and noticing something feels off. Gas prices have suddenly jumped, your grocery bill looks higher than usual. The news is filled with alarming headlines about markets dropping, supply shortages, and rising inflation. At first, it might feel like one of those random economic swings that happen from time to time, but it's not random at all. There's a deeper story behind it, one that starts thousands of miles away, in Iran. And what's happening there could ripple across the entire globe in ways most people don't even realize. Most people don't think about how one conflict in a distant country could impact their daily lives, but the reality is the global economy is more connected than ever. It's like a giant web. Tug at one corner and the vibrations are felt everywhere. Iran sits next to one of the most critical oil routes in the world, the Strait of Hormuz, a narrow waterway that handles nearly 20% of all global oil trade. To put that in perspective, every fifth barrel of oil in the world passes through that single strip of water. When conflict threatens that route, it doesn't stay local. It sends shockwaves across continents, affecting countries and economies that have nothing directly to do with the war. So how does this really affect everyday life? It starts with oil. When there's tension or war near key oil routes, companies and governments become cautious. Tankers slow down or avoid the region entirely. Supply drops and prices begin to rise almost immediately. But oil isn't just fuel for cars. It powers industries, transportation, and even agriculture. It's the lifeblood of modern economies. When oil becomes more expensive, it quietly pushes up the cost of nearly everything around us, from the clothes we wear to the food we eat. The first and most visible effect is inflation. Higher fuel costs mean businesses spend more to transport goods, and they pass those costs on to consumers. Your morning coffee might cost more, your commute gets pricier, and suddenly your paycheck doesn't stretch as far as it used to. But the impact goes much deeper than that. Inflation caused by rising oil prices, known as cost-push inflation, spreads across the economy, and in today's interconnected world, no one is immune. And then there's food. Modern agriculture depends heavily on energy. Tractors, irrigation systems, and fertilizer production all require fuel and electricity. When energy costs spike, farming becomes more expensive. Fertilizers, which are crucial for high crop yields, become costlier, and farmers either produce less or charge more. This leads to higher food prices globally. Even in countries where people are used to stable food costs, the difference is noticeable, and in developing nations where a large portion of income is spent on food, the impact can be devastating. A rise in global food prices doesn't just hurt wallets, it threatens livelihoods and stability. Global trade is also heavily affected. Businesses rely on predictable shipping routes and stable costs to move goods efficiently. When a major region becomes unstable, uncertainty takes over. Shipping companies raise prices to cover risk, insurance costs increase, and delivery delays become common. Factories may slow production due to material shortages. Retailers face empty shelves, and customers feel the pinch. It's a global traffic jam in the supply chain, and the effects reach far beyond the countries directly involved in the conflict. Financial markets are extremely sensitive to these disruptions. Investors don't like uncertainty, and when they sense risk, they start pulling money out of stocks, bonds, and emerging markets. Markets become volatile, prices swing wildly, and overall confidence begins to erode. This isn't just about numbers on a screen. It affects real businesses and real people. When companies lose confidence, they delay investments, cut spending, and sometimes even lay off workers, slowing economic growth. Meanwhile, governments face a difficult balancing act. To control inflation, they might raise interest rates, making borrowing more expensive. That can help slow rising prices, but it also makes it harder for businesses and consumers to spend and invest, which slows down economic growth. Keep rates low to encourage spending, and inflation could continue to rise uncontrollably. This is the kind of tricky situation economists call stagflation, a combination of slow growth and high inflation. Stagflation is notoriously difficult to manage, and history has shown that it can lead to prolonged economic pain if not handled carefully. The impact of all this isn't uniform. Strong, developed economies may weather the storm better, but weaker or developing nations often suffer the most. Countries that rely heavily on imported energy, have weaker currencies, or are more dependent on trade feel the effects much more immediately. For example, countries like Pakistan or Egypt can experience rapid currency depreciation and skyrocketing domestic prices, making everyday life increasingly difficult for ordinary people. And because the world is so connected, economic stress in one region can spread quickly, affecting even distant economies. If we step back and connect the dots, the pattern becomes clear. A conflict disrupts oil supply, oil prices rise, energy costs push inflation higher, food and goods become more expensive, trade slows down, markets panic, confidence falls, economies shrink, debt rises, financial systems start to strain. The chain reaction moves fast, and eventually this can lead to a global financial crisis. It's not a single catastrophic event, it's a domino effect where each consequence amplifies the next. What makes this even more dangerous is how gradually it builds. At first, you notice small price increases, slight volatility in markets, and maybe some disruption in shipping or production. Many people ignore these signs because they seem minor, but over weeks and months, the effects compound. Inflation becomes persistent, trade bottlenecks worsen, markets remain unstable, and governments struggle to respond effectively. Before anyone realizes it, a slow-moving crisis has reached full force. For individuals, the impact shows up in ways you can feel personally: higher utility bills, rising grocery costs, more expensive transportation, and uncertainty about investments. For businesses, it means tighter profit margins, supply chain headaches, and strategic uncertainty. For governments, it becomes a balancing act between controlling inflation, supporting growth, and managing debt. And for global markets, it means volatility and risk that can ripple across every sector of the economy. The Iran conflict illustrates one key lesson about the modern world. Our economies are deeply interconnected, and events in one corner of the globe can have consequences thousands of miles away. What seems like a local or regional issue can affect everyone, from consumers and workers to investors and policymakers. It's a reminder that in today's globalized economy, stability is fragile and sensitive to disruption. So the next time you notice rising prices, fluctuating markets, or supply issues, remember that it's often part of a bigger story. Events far away, seemingly unrelated to your life, can have profound impacts on your finances and everyday experience. Understanding these connections doesn't just make you more informed, it gives you perspective on why certain economic shifts happen and how they could affect your future. In the end, a single conflict in Iran isn't just a news headline, it's a catalyst that can trigger ripple effects across the world. Energy, trade, food, markets, and inflation are all connected, and while governments and businesses scramble to respond, ordinary people feel the impact first and most directly. The world has faced oil shocks and economic crises before, and the lessons are clear. When supply chains are disrupted, confidence falters, and inflation rises, the stage is set for a global financial storm. Understanding this helps us prepare, stay aware, and make smarter choices in uncertain times.